In the last 5 years, Dell is up 153%. Year to date, it's up 66%. And during this past month, Dell has been all over the news. Dell has best day on stock market since relisting in 2018 after earnings sale past estimates. Dell trounces second quarter goal, says AI is a tailwind. Here's why Dell stocks is hitting new all-time highs today. Dell sales top estimates in positive signal for PC market. And Dell shares jump on raised forecast fueled by AI and hardware sales. Okay, let's first look at Dell's stock and determine an optimal price point if you're interested in buying it. When we see price targets for Dell, on the low end we see it at $45 and the high end at $65, with the average fair price at $57.57 per share. Looking at the 6 most recent recommendations, all maintain a buy rating. Let's also include Graham's number, which is a valuation method popularized by Benjamin Graham, the father of value investing and Warren Buffett's mentor. We include the book value at negative $4.15, earnings at $2.62, but the Graham number doesn't accept negative numbers, so we'll help the stock a little and put a 1 cent for book value. And so we get 77 cents per share, making Dell incredibly expensive right now. But unlike analysts who can be too optimistic and Benjamin Graham who can be too conservative, there should be a middle ground, and that's my fair price for Dell. But before we get to that, join my Patreon. You'll get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. So should you buy at the current price? I give Dell a fair price of $91.53 per share. Right now, the stock is undervalued, and you'll see that many long-term investors think so as well. Now you know the price you should buy, but we need to analyze the business and see if there's a good business behind the stock. For the rest of this video, you'll see a point system at the top right of the screen. 1 point will be added every time we have a good metric. The closer we get to 21 points, the better the business. Let's first look at Dell's expected growth, otherwise what we can expect them to do going forward. We want both growth metrics to average above 8%. Dell's next year's projections are good at 10.3%, and the next 5 years looks like that growth will drop considerably to negative 1.6%. Since it didn't pass our threshold, no points added there. Next, let's look at Dell's key valuation metrics, specifically 5 of them. These key ratios, we want all of them to be below the index in order to give Dell a passing grade for this section. The price to sales ratio is at 0.54, whereas if you invested in an index, it would be at 2.4. 1 point added there. The PE ratio is at 26, whereas the index is at 21. No points. The price to cash flow is at 6, whereas the index is only at 15. 1 point added there. The price to book is at 4, whereas the index is at 3. No points. And for the PEG ratio, we want the ratio to be below 1, and it's at 7.5, so no points there. Noting that down in this section, we add 2 points. Following that, let's look at Dell's operating performance, specifically 6 key metrics that deal with its business health. For these first 3 returns, we want the percentage yield to be higher than the alternative, which is again the index, in order to get a passing grade. The return on assets is at 2%, with the index at 10%. No points. The return on equity is at 66%, whereas the index is at 27%. We can add 1 point there. The return on invested capital is at 6%, with the index at 17%. For these 3 metrics, we want the yield to at least be above 15%. Dell's gross margins look very healthy at 22%. We can add 1 point. The operating margins are at 5%. No points. And net margins are at 2%. No points again. For this section, we add 2 points. Next, let's look at Dell's dividend metrics. Basically, if you're like me and put great importance on getting paid as a shareholder, you'll focus on these metrics. Dell is pretty good since it pays $1.48 per share, translating to a 2.05% yield. Include its buyback yield of 3.25%, we've got an annual yield of 5.3%, which is good, but it's less than its 5-year average. No points added. When we look at the payout ratio, Dell pays out 53% of its profits to shareholders, which is a lot higher than its 5-year average. No points added. For this reason, we add only 1 point. Let's move on and look at Dell's financial health by checking out its balance sheet during its most recent quarter. For these 5 metrics, we want a decent figure, but also we want them trending in the right direction to give a passing grade. We see its assets at $84 billion, which is trending down, so we don't put points there. Liabilities at $87 billion, which is also trending down, and that's good, so we add 1 point. No debt, so we add 1 more point. Equity is at negative $2 billion, which is trending down, so no points there. And cash holdings are at $7 billion, which is trending down, so no points again. For this section, we add 2 points. Looking at free cash flow, right now Dell has no cash flow, so we don't add any points there. And finally, for this section, we have no points. What I see from these key metrics, Dell has a disappointing business. In the end, I give Dell a final grade of 44 out of 99. Overall, we've got a disappointing business, but at least it's undervalued. The AI hype will continue, and you'll probably ride that out, but from the fundamental standpoint, this isn't an ideal long-term investment. So tell me what you think of Dell. Invest wisely, and as always, take care of your money.